Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, 6th day of July, 2016, and this is the Daily Report for Gold and Silver. We do have a moderate rally in the precious metals markets. Of course, a tremendous rally that's in a continuation cycle. Gold currently trading up about $6-7 on the day, 1365.40. That, of course, is our COMEX bid. Of course, we are still long a gold position that we entered at roughly 1338. Stops are currently at 1324. We'll talk about moving our stops today. We'll also talk about our upside targets and exit strategy, all on today's daily report. So traders, absolutely no doubt we do have a nice upside move today. First chart that we're looking at is in essence a daily chart. On this daily chart, it is in Japanese average format. We can absolutely see that we still have a lack of any kind of a lower wick. That, of course, is a bullish sign. We also have a decent body size. That tells us that, in essence, the trend is still intact. Of course, these are lagging indicators, and what we look for on this kind of a chart is as the market moves up, we look for a decrease in body size, we look for the appearance of a lower wick, and then, of course, we look for these what we call pivotal doji candles, in which we go from a rather large body size to, in essence, a small or absent body size. So in terms of looking at this particular study at this particular time, it tells us that our trend is still intact. And traders, that takes us to our current position, current stop, as well as our current exit strategy. We are long, of course, at 1338. We moved our stops up yesterday to below 1324. That would be this low right in here that occurred 3 days ago. I am suggesting at this point that we trail our stop up a little bit tighter today from the previous low of 3 days ago to the previous low of yesterday, which comes in roughly at 1340. We will attach a trade alert to the email that goes out and try to get a SMS text message out to you. Traders, by the way, if you haven't already signed up and do want these trade alerts to come to your phone, you simply have to go in and sign up for it. There's no additional charge, but we do need your number. Now, why am I moving the stop up so tight and so quickly? Well, I think that we might have, in fact, hit a first potential level for resistance. Although I don't think the market will stall here, this is a place that we do want to take a look at. And let me show you why. So if you recall, from our show over the last couple of days, we've been doing a couple of fib extensions to really ascertain or take a look at where we think this market could head to, and that is really what's making up our exit strategy. Now, we're using a basic Elliott wave model, and on this Elliott wave model, we look at wave one as our absolute benchmark, because with wave one in play, it will allow us to determine where we think wave two should go in terms of a fib retracement. 61% retracement was logical. It came in at 1253, so very, very close to this 1245, which is that 61% retracement. From there, I believe we completed that, and that gives us a target to look at for where we think our wave three should actually conclude. Now, here's what's interesting. We absolutely believe that we would go and trade above a 61% extension of wave one, because wave three, by theory, should never be the shortest of any of the impulse waves, which means at minimum, it's going to be a one-to-one relationship, and that's what takes you to 1371. Well, we have achieved that today. The market has come in and taken that particular price point out. My actual target for this trade is a 1.23% extension. You can typically see it go as high as 1.61 on a really dynamic rally, which we really could construe as a distinct possibility. But as I said, my sense right now and my first target has actually been achieved, which is 1-to-1. And that's the reason I think it's important to move it up just in case we do get some sort of corrective action. And you might even want to consider putting in a price order to get out somewhere in this area at around $13.99, $13.95. I think that would be a prudent play. And if you do that, you might want to put it in as what's called an OCO, and I'm not a child, but I'm using a mouse to write. OCO simply means one cancels the other. And so what that would mean is we currently have a stop that we've moved up to 1340. OCO sell it at 13.95. So if the stop gets hit, which we're hoping does not happen, it would cancel this upside order. And if the upside order gets hit and is executed, it would cancel the stop, which of course would be what we would look for in terms of the accomplishment of that trade. So traders, you can go ahead and place it in as an OCO, 13.95, stop 13.40. So traders, lastly, do want to take a quick look at silver, up about 0.75%, about a 15-cent rise, over $20 again. Here's the thing. I'm looking at our current trade in gold as being at the upper level of that range. In other words, we're already putting together our exit strategy and placing orders as such. So therefore, I believe that if we see gold come under some sort of a corrective wave, we're in 3 of 3 right now. Once we conclude that, we're going to go into a small correction in wave 4. That's not the time to get long silver. It'd actually be the time to short it, because this market is what goes up parabolic typically can come down parabolic. And when you consider this market's had this really $4 or $5 rise, you've got the market trading at $16 at the beginning of June, and rises to an intraday high of $21, that pretty much is the definition of a parabolic rise. If you look at parabolic rise in the dictionary, you might in fact see this chart. With that in mind, I would look to, because of the renewed interest and really the zest that silver has had, we'll look to include it on our next long trade in tandem with gold. But for right now, we want to be sidelined. This has been Gary Wagner, wishing you as always good trading. Go ahead, place the OCO orders in the market along with the trailing stop. We will talk to you tomorrow for another daily update and review. Bye-bye.